Hello everyone, good evening. Welcome to the Simpler Futures video tonight for Thursday, tomorrow, the 18th of May. Little news in the markets today. S&P's sell down to a point that I'm going to show you on the chart in just a minute, but they were down pretty considerably today. And the question is, of course, you know, what are we looking at tomorrow and going forward? I'm looking at the SPYs here, and specifically for this expiration. And I'm seeing a lot of open interest, volume and open interest here at the 235.7 and basically like 240 strikes here, which is on the SPX going to be 2350, 75, and 2400. And that's true on both the calls and the put side. So what I'm thinking now, and showing you that. Now to get over here to the chart, what I'm thinking is that one, the S&P sold down to this gap that was created on the gap up from the April 21st Friday close to the April 24th Monday open right there. The gap low there was 2356 in the S&P futures, and that's what we sold down to today. So given what we just discussed on the options chain there, and what I'd be looking for then going into this expiration would be for tomorrow, if we do, because this, you know, finishes pretty weak, so this would have you look for the likelihood of a little bit of fall through tomorrow. If in the event after tonight we don't recover much, by the way, I'd look for it up to around 2370 or so tonight. But if in the event we don't recover terribly much tonight, then what we'd look for tomorrow might be a little bit lower low. But it's going to be very important to note how this trades lower. In other words, what I'm be looking for is a little lower low. But if it leaves a wick or a shadow on the bottom with a decent close, that sets up for Friday into the expiration up into or above the 2375 print on the ES or the 237s on the SPYs. It would look like something like this is what I'm talking about. So you get something that looks like that, where you make lows on buying, sit down, lows are rejected, finish pretty firm. That sets up for a move higher, the follow through, which would put us into Friday expiration. So this is the chart, the gap fill. There's some more going on too I'm going to get into in the premium video, but it basically is looking at some levels in the yen, gold, bonds, etc. I mean, the bonds came up to within an inch really of making their gap right here, the same gap, which is the April 21 to 24 gap. It needs a 53.30 trade to make that gap. I think it traded 28 today, so you know, trade up into that and then come off of that upward trend line right there, that downward sloping but upper trend line overhead, come off of that. That would help propel the stocks higher. Gold into a big print in the 60s, which has it pull back to its major level in the area, is right in here in this area, is actually 54, 55 right in there for a volume profile level. And then also on the yen, you can see that it's approaching a pretty key level, in my opinion anyway. It should just be the half back on this last reference candle, that big down day right there. Also puts it pretty well into this upper and downward sloping trend line overhead. If we can get it to make that and then pull back, well then that also helps to make the case for the stocks putting in that lower wick and making a bid higher into the expiration. So that's what I'm thinking. Doesn't necessarily have to happen that way. I told you earlier in the week that we'd be looking for a pullback on midweek, about Wednesday. I didn't really, to be honest with you, have this much in mind. But anyway, we're getting a pullback. So if we step a little bit lower, leave the wick on the bottom, finish pretty well tomorrow, which is what I'll be looking for. That sets up for that move into the expiration on Friday. So that's my thought. Hope it helps. Good trading. Good evening.